Bismillahirrahmanirrahim. Assalamu alaikum, dear students and viewers. Welcome to my YouTube channel DigiLearnersPoint. Today video address the question number 1, which is related to the side number 2 of subject advanced accounting, which has a subject code 0444, and it is related to the second assignment of autumn semester 2022 of AIOU examination system. So its total marks are 20. Let's start reading the question. Then we will move to the requirement of this question, and finally we will see the solution of this question. The Yasir Corporation was registered with the nominal capital rupees 1.2 million divided into equity shares of rupees 10 each. Uh, on 31st March 2021, the following ledger balances were extracted from the company's book. Equity share capital up and paid up is 920,000, plant and machinery 720,000, stock opening stock as on 1st April 2022 150,000, fixtures 14,400, preliminary expenses 10,000, freight and duty 26,200, goodwill 50,000, wages 169,600, and cash in hand 19,700, cash at bank 76,600, directors fees 11,480, bills payable 76,000, and general reserve 50,000. On the other hand, profit and loss account credit means not loss, it is a profit, and balance will be appear on the credit side of the profit and loss account. 29,000, office equipment 8,000, and other information on the second column is 10% debenture investment 600,000, not investment, it is liability. Sales 830,000, 500 government securities, it is investment 120,000, reserves for doubtful debts 7,000, Sundry Creditors 100,000, Sundry Debtors 174,000, buildings 600,000, bad debts 4,220, commission paid 14,400, and salaries 29,000, purchases 370,000, and interim dividend paid 15,000, rent 9,600, and general expenses are 9,800, debentures interest is equal to 10,000. The following adjustments were to be made. The stock on 31st March 2021 was estimated at 200,000 closing stock. Final dividend at 10% to be provided. Other than this, debenture interest, it is dividend. Dividend means the portion of the profit paying to the equity holders, shareholders. Depreciations on plant and machinery at 10%, and fixtures on 5%. Preliminary expenses to be written off, totally written off. It is a part of fixed asset. It is a capital expense. It is 30,000 were to be transferred to general reserves. The provision for bad debts to be maintained at 10% on sundry debtors. First, you are required to prepare the trading and profit and loss account and profit and loss operation account for the year ended 31st March 2021 and the balance sheet as on that date. So basically we have three requirements. Two is related to profit and loss account, and the one is balance sheet. So let's move to the solution. The solution I have made in Excel sheets. So here is the solution. So Yasir Corporation trading and profit and loss account. So particular the opening stock 150,000, purchases 370,000, wages 169,600, depreciation plant and machinery. Please collect this one spelling machinery. Because plant and machinery is directly involved in the production of the goods, so I am taking this depreciation as a part of cost of goods sold. So it will not be covered in the indirect expenses. So I will have written it in under the cost of goods sold portion or trading and profit and loss count. Freight and duty 26,000, and it is obtained how by multiplying 720,000 with 0.10 and freight and duty is equal to 26,200. Gross profit is the balancing figure of by subtracting from this amount. Look at this. I'm going to show this one. How much amount is there? 761,600. I'm going to subtract it from. Sorry. Okay. 787,800 from this amount. We will get this balancing figure, which is termed as gross profit, which is equal to 242,200. So write this gross profit on this side, 242,200. Interest income is receiving from investment made in government securities at 5%, so 6,000 is here. So now come to the indirect expenses. I'm going to delete this one. And director's fee is 11,480. Preliminary expenses we are going to totally write off, means we are going to charge as expense to the profit and loss account. Indirect expenses. Commission paid 14,400. Salaries for 29,000 and 9,600. General expenses 9,800. Debentures interest, which is are already paid to some extent 10,000, and debenture interest at 10% 60,000. So depreciations fixed is equal to 720. This is a depreciation. Bad debts is equal to, how we will get this bad debts. So bad debts 400,220 plus new one at a rate of 10%, which is equal to 17,400, and minus 7,000 old one. So profit balancing figure is 78,580, which will be transferred to the profit and loss preparation account. One thing more I want to share with you here regarding the profit and loss preparation account is that it is totally related to the profit and distribution to the shareholder equity. So look at this. This is last year profit balance carried on 29,000 as given in the information table. So current year profit, which has been come from the profit and trading profit and loss account. So interim dividend, which is a part of the trial balance, extracted table. Final dividend proposed. It is obtained by paid up capital, equity, share capital, and paid up capital of 92,000.01. So please remember that I am going to take this point 1 of the share capital. If paid up capital is more than which is termed as premium capital, share premium capital, so we will not take into account that amount. So we are going to on the face value, nominal value of the share, we are determine this. General reserves 30,000 has been transferred, so I have written it here. So the loss here, in this case there is a loss 29,420, which is a balancing figure of this account, and this balancing figure will transfer to the balance sheet under the heading of equity and share capital and further subdivision reserves. So come to the last requirement of this question, balance sheet. So asset is equal to current assets, cash in hand, interest income, cash at bank, sundry debtors, stock. So 19,700, 6,000, 76,600, 156, 200,000. On the right hand side, there is current liabilities, sundry creditors. You see that sundry debtors is 156 because I have subtracted the provision for doubtful debt, which is equal to 17,400 from the sundry debtors. So net amount we are going to return here 156,600. So here interest liability against debentures. So you can, it is good to be right here 10% debenture. So bills payable 76,000, proposed dividend 92,000, which is also the part of this is profit and loss preparation account here, but here it is become as a part of to distribute uh, to this share capital holder but here as a part of liability, because we didn't pay this, we just create a liability against this proposed dividend. So come to the total assets, non-current asset of fixed asset, building 600,000, plant and machinery 720,000. This is a conventional way of writing negative values in the counting system. So 72,000 is depreciation, which is subtracted from the cost of the plant and machinery, and which might be the initial or book value. Office equipment 8,000. No depreciation is charged here because no information given regarding the rate of office equipment. Fixtures 14,400. Accumulated depreciation fixtures 720. 5% government securities 120,000, and 6,000 is the income interest here 120,000. I think I have mentioned here interest income here, which is receivable. Uh, So Goodwill also fixed as a 50,000, and one thing remember that preliminary expenses has been write-off from here because of it has been written off and charged as expense in the income statement. Now come to the non-current liabilities. 600,000, 10% debentures, equity and share capital, authorized capital, 120 shares at rupees 10, which is equal to 1.2 million. Shares issued and paid up capital 92,000 shares at rupees 10 means, and not issued shares are at par value, not at premium, not at discount. 920,000 reserves, we have two types of reserves, general reserves, profit and loss count. Look at this. From the information given in the table, we already have reserved 50,000 and we have transferred 30,000 from the profit. So it will become 80,000 profit and loss count of the last third quarter or last month is 29,420. So total is 970,580, which is equal to the which is represent the equity and share capital total. And we have a total liability, and this one current liability is current asset plus non-current asset. Here it is the total liability, which is including uh, equity and share capital, non-current asset, and finally current liabilities. Look at this, both sides are equal. So the solution is finished here. So I hope you will find this solution useful and easy to understand. But if you have any question, you can ask me in the comment section, or if you want to add something more from your side, provide your suggestion in comment section as well, but with logical arguments. And last thing, if you found any mistake regarding calculation, please also correct it in the comment section for the benefit of all. Thanks for watching. Assalamu alaikum.